Hello guys, welcome back to my YouTube channel again. So today we're going to talk about the exact strategy that I use to trade NQ throughout learning session. I have been consistently trading this strategy throughout the whole month in June, and I was able to generate more than $20,000 profit by trading this strategy. So just to show you guys the results, as you can see, my sim funded account with my funded futures, I have $13,000 profit sitting in there, and I already requested a $2,000 payout from this account already. So this account, I have made more than $15,000 profit, and for my top step account, as you can see, I have requested $6,000 payout since June by trading this strategy. Okay, so yeah, so this is a strategy that I've been trading pretty much every single day since I have transitioned into the futures profit space from the CFD profit space. If you're interested in my story with the CFD profit space, please go to my channel and watch my first video. But yeah, let's get into it and let's talk about the strategy that I use for learning session. Alright, now let's talk about the exact strategy. So first of all, I will just explain you guys the framework, and then I will go into the real life example, real market example to show you exactly how I traded that. So assuming this is the daily opening gap, assuming this is the London market, I'll look at London market anywhere between 2 o'clock to 6:30. That's sort of a London session that I genuinely trade, and anything after 6:30, I don't generally try to enter a trade right before New York open, because the New York market has been extremely volatile. So generally speaking, whatever the trades that you enter throughout the London session, if it's still running in New York, you're most likely getting tapped out. So generally, I'll look for trades London session anywhere between 2 a.m. to 6:30 a.m. Okay, so assuming that the market has opened up, and then once the market has opened, it's been trading in a trend on the 5-minute chart. So the key thing here to understand is that you do not want to overanalyze this strategy. You do not want to overanalyze the market trend. So all you want to look at is just the current trading session for the Asia. So you do not want to go into like hourly time frame, 4-hourly time frame, or daily candle, trying to understand the daily bias or trying to figure out where the market is going to go for the overall pricing for the day. Okay, you want to make it as simple as possible. All you want to look at is from 10 p.m. in Asia market. Okay, from 10 p.m. till 2 a.m. in the morning. Let's assume that this was 2 a.m. here. Right, so from 10 p.m. to 2 a.m. is the market trading on a single direction in a trend based off the 5-minute chart. Okay, you do not need to go into any different time frame, just the 5-minute chart, just to spot out if there is higher highs or lower lows. So assuming in this case there is higher highs, market is trending up. So all you wanted to see is after that, if you have identified a trend, what you want to do is you want to mark out a 50% level of the trend. Okay, so 50% level of the trend, and you want to wait anywhere between 2 a.m. to 6 a.m. You want to wait for a retracement into the trend. However, this particular retracement cannot exceed 50% level of the trend that's already created, because if it exceeds that, that's telling you the momentum has shifted. So you just want to see a retracement, and you want to spot a look for a point of interest area on top of that 50% level in around this area. And this point of interest area, you can try to look for it on a 15-minute chart. Okay, you can either look at it on the 5 minutes or 15 minutes. I would generally look at both time frames just to see which one makes sense to me. But when you're trying to analyze a market structure, you only want to look at a 5-minute structure. You don't want to go into a 15-minute structure, because sometimes throughout the Asia and the London session, there isn't a lot of liquidity. So if you look at a 50-minute chart, you don't see a clear structure compared to the 5-minute chart. So you want to look at 5-minute chart to understand the market structure, and then you want to look for 50 minutes or 5 minutes to look for a point of interest area that's sitting above the 50% level. And then after 2 a.m., you just want the price to retrace into that area, and then you want to take a long position that's in line with the trend that's already created previous to the London session, and that is very important. This is not a reversal strategy. This is just a kind of a trend trading strategy, however, using some of the SMC concept to trade. So you want the basically price to retrace back into it, and then you just want to go for a 50 points stop loss and TP. It is a 1 hour strategy. So based on my experiences and the trading for the past few months, I noted that 50 point is the most consistent and reliable outcome for this strategy. Okay, and then ideally your stop loss right below the stop loss in this point of interest area. You want your stop loss sitting at the area that's very efficiently traded. So in that way, when the price comes to your stop loss, tap into your stop loss area. Because this area is very efficiently traded, generally it needs quite a lot of momentum to trade it through. So if your stop loss is placed in the area that's very efficiently traded, that is a very strong A+ setup. And then also ideally you want your TP toward into the area that's quite inefficiently traded. So you want this retracement leg coming into it pretty quickly. So in that way that you can see that this area has left quite a lot of inefficiency for the tries to come back to fill that gap. And that is more of an A+ setup, but that doesn't necessarily has to be that way. But if you get those, that's an A+ setup for this strategy. So that's basically the framework. And if I show you guys the exact chart of what's happening this trading week. So if you look at the for this trading week, I do the setup every single day. But I'm just going to explain to you Monday, Tuesday, which is yesterday and today. Sorry, Monday and yesterday. That particular setup didn't happen today, so that's why I didn't took any trade today. But let's have a look. This was Monday's price action, right? So Monday. So the way that works is, as I explained, you mark out 2 o'clock, 2 a.m. and then from this point onwards, you want to look for the setup. So you want to look at before 2 a.m. is there a clear trend? And as you can see, the trend is very clear, right? It's going to one direction, which is bearish. And then once you saw that, okay, you want to look for a, you want to mark out the 50% level, right? 50% level is here. And then you want to look for the point of interest area below that 50% level. So in this case, if I can see that this area is quite efficiently traded. I can see there's a bit of a fair value gap in this area. But if I zoom into the 15 minutes, zoom out to the 15 minutes instead, as I explained before, I generally will look at both 15 minutes and 5 minutes just to see which one makes sense to me. So on the 15 minutes time frame, as you can see, there is a clear inefficient area. And then there's also an order block at the 50%, just on top of 50% level to protect that area. So this was a really good A+ setup to me because the point of interest is sitting right below the 50% area. On top of it, there is efficiently traded area to protect my stop loss. And also there is an order block here in addition to that to protect my stop loss. And I'm also trading with a trend that's quite heavy. Okay, this is quite a heavy trend that's created throughout the Asia market. So yeah, so basically you can leave a limit order right there, 50 points, and that's exactly what I did. And yeah, so this particular trade worked out pretty well. And for this particular day, I actually took, because you're only aiming for 50 points, sometimes within the same section, based off the same trade idea, you get multiple trades. So on this particular day, this is quite an advanced topic. I might do a further explanation in my futures video, but on this particular day, all right, this 50 point is, by the way, it's already $1,000 profit. So I actually made $3,500 profit because what happened is this trade hit my TP pretty easily, and I was just watching the market, and I was seeing that market is definitely continuing with the trend, and it created another fair value gap here, right? And then I took another trade, 50 point, and I was able to do that multiple times throughout this session based off the same trade idea, okay? And so I was able to generate it. As you can see, price was quite heavily consolidated around this area, so I was able to make quite a lot of money in this session based off the same trade idea, okay? But for the new traders who just starting to practice this trade setup, you just want to take the first setup, because the first setup is the highest quality setup throughout the session, okay? So that was Monday. And if you look at Tuesday, okay, and if we look at Tuesday, which is yesterday, okay, so this was yesterday. Yep, so as we can see that from yesterday's price action, from 10 p.m. So basically from 10 p.m. we look for the trend after 10 p.m. In New York time. Okay, so the reason being because sometimes you get a bit of a consolidation up and down at the early Asia session. So it sort of confused you with the early volatility throughout the Asia market. But generally speaking, after 10 p.m. market will trend towards the single direction. So in this instances, after 10 p.m., especially right before the midnight open, market has traded into a single direction. So when I saw that, I mark out my 2 a.m. chart, and then as I said, you mark out your 50% level. Okay, so again, same situation, right? So if you look at 50 minutes, look at both time frames, just to find one that makes sense to you. So in this day, I see the 50-minute order block here, right? This order block, again, just similar to the previous day, sitting right on top of the 50% level to protect our stop loss. And on a 5 minutes time frame, that we can see there's not a lot of efficiency, but we can see that this particular area has been traded quite efficiently. So if I'm putting a stop loss right on top of that, the market needs quite a bit of a momentum to trade it through. So on this day, again, I left my TP here, 50 point. My entry for this one wasn't absolute perfect, I remember, because I hesitated a little bit, but what the price basically did was my TP was like sitting somewhere here, right? So I think my entry wasn't absolutely perfect. So for this day, what happened basically was I was entering a little bit later. So somewhere probably here. So obviously the price came down, and then it didn't hit my TP. Then it started to retrace back up, and then when it retraced back up, it came back to this order block area. And as I explained to you, technically, if this strategy works, it shouldn't trade through those 50% level, right? And also because that level is protected by order block and also efficiently trade the price area. So your stop loss should be protected quite heavily into that area, and then which in this instance it did, and then it just market completely started to sell off towards to the opposite direction. So yeah, that was the Tuesday trade. So that was the basically example of Monday and the Tuesday.